I have with me Ron Cross from ParkTrent. He is actually a property investment advisor, and we're going to be talking about the state of the property market. Ron, welcome to Dollars with Sense again.
Dallas, it's great to be here.
Now, the property market, there's so many parts of it, but what's it doing?
Well, I'm excited about the future. We've come off 4 years of subdued growth. A lot of things happening out there now that is creating the perfect storm for property investors and people to get back into the property market.
So what about those people that have actually invested over the last 4 years that are out there? Have they shown any growth at all to their investment portfolios?
Depending where they've purchased, some areas have performed reasonably well, others have been subdued and held their base. They haven't moved much, but also we've experienced through our operation that we still have had reasonable growth in rental income. So one has counterbalanced the other. So it's gone quite well, I believe.
Let's say I want to go out and get an investment property, and we'll talk about residential.
Yes.
Residential investment, whether it's a unit or a house. What should you be looking for? How do you assess whether or not it is the proper investment for you?
Well, a lot of things need to be taken into consideration. First and foremost, I suggest that the people that are looking at buying an investment property or even buying their own home, first and foremost, they should talk to somebody that's skilled in handling that transaction for them to whatever level. And naturally, a homeowner needs different requirements, but an investor, certainly it gets a little bit more complicated. And I think they need to sit down with people that fully understand how the structuring of that purchase should be, such as the tax implications, the cash flow benefits, and they should structure their loans as well to get the maximum benefit from it.
So before they do anything, sit down with somebody who understands the financing, the taxation side of it, the property side of it, and work out what suits you?
Yes, definitely. You know, some people come along and they have different requirements. Do they need to create extra equity in the shortest possible time? Do they have a large home mortgage that they need to probably get that reduced and get some offset from the cash flows? These are all things that we look at when we're looking at people coming into our business, contemplating buying an investment property. Now,
some people, and I don't want to beat up on Queensland, but some parts of Queensland aren't going too good, yet some are going okay. And the same within Victoria. There's some segments of the market here in Victoria that aren't going as good as they could have, yet there are other parts that are going okay. How do we work all that out? What tools do you have that the average person looking at this program wouldn't have?
We have research houses that do a lot of work for us that we subscribe to, such as RP Data, Residex reports and such. But one thing that we do have that a lot of other people don't have, Dallas, is we have years and years of personal involvement and experience in all markets throughout Australia. And that tells us that, you know, you've just mentioned that Queensland has some pockets that aren't performing too well, and then you jumped across to Victoria. I think we're heading for the perfect storm for people to become involved in property. And the reason why I say that is we have currently interest rates at a very affordable rate.
Under 6%?
Under 6%. Variable rates under 6%, and certainly fixed rates are 5.3% for 3 years. We also have a huge shortage of rental properties throughout this country, as I said.
Now, those rental property shortages are in homes or units or what?
It doesn't matter. Dwellings of all types and all sizes, all shapes, and all different areas are short. As I say, during the global financial crisis, which we've just experienced from 2009, 2012, which is starting to abate, which has been subdued right at this point in time, all our properties have received modest rent rises through that period of time. And the perfect storm is coming because we now have lovely incentive programs for first home buyers. You know, up in some states it's the total concession by the government by way of stamp duties and also first home buyers grant relate to around $30,000 to $35,000. It doesn't take very long for that marketplace to absorb all the oversupply that's in that bracket, and that will push the prices up. So I'm saying the perfect storm. I believe now in the next 18 months, the property prices will move substantially, and my prediction is that they'll move by 7 or 8% over the next 18 months.
So that's substantial.
Yes, substantial, and you know, people need to be in the marketplace to make it happen for them. And as I stated, and I've just said, that we are in the marketplace every day. I travel from one end of this country to the other, and my senior management also do the same, and we're able to look at a lot of great projects that come online, and we get involved in them, and our investors that invest with our group and our companies certainly share the benefits of those investments.
Now, you're actually a qualified property investment advisor.
Certainly.
What's the difference between that and a real estate agent or somebody that's trying to sell an investment property like some organisations do? There's nothing wrong with it, but I just wonder what the differences are.
Well, the difference is that I've done the course, the diploma. I have received that, and over 2 years I've done that study to make me a property investment advisor. And there's a lot of detail in that course that I've done. It's enabled me to give wonderful advice to people and hold their hand and show them what properties they should buy, show them the structure that they should purchase them under, and also told them and explained to them the wonderful taxation and benefits that we enjoy in this country to become property investors.
Now, Ron, why wouldn't I, let's say if I'm living in Ivanhoe or Malvern or somewhere else, it doesn't matter, I just pluck those out of the air for the sake of it, why wouldn't I just buy a house around the corner?
Well, certainly if there's a house around the corner and it's got everything that you need, it's got the opportunity for value increase, capital growth increase, also the rentals are strong, you need to look at one thing, that if you're buying the house around the corner, I would suggest that it's probably an older house. Well, if it's an older house, you're going to lose some of the massive tax advantages that you get for buying a brand new house. So you need to put that into the consideration as well. I would suggest that if it fits your bill and it suits you, get some advice. Get someone to have a look at the numbers for you, a qualified accountant or an investment advisor such as myself, and we can certainly help you and see if that stacks up for you and it's the best thing for you to do.
Ron, thank you.
Pleasure.
Well, there you have it. Ron Cross from ParkTrent. He's a qualified property investment advisor, and his advice is seek the experts before you do anything. So your first point of call is to speak to somebody who knows what they're talking about and has the proper information at hand to help you in your future. Thanks for watching Dollars with Sense.